Hi, Joe. Thank you very much for joining us today. After being up more than 500% in the last 2 years, the spot lithium price has pulled back significantly in 2023, and the lithium price has been very volatile this year. Why have we seen such volatility this year in the spot lithium price?
Well, I think there's more than one factor. One would be all the information coming out of China, and I think as time goes on, we're getting less quality information out of China and more that's used to game the system. CATL and BYD have the most to gain by having lower lithium prices, and I think they've got the country's analysts marshaled into giving relatively false narrative. On the other hand, there are factual situations. When they did end the COVID lockdown, there was a lot of chaos in the country in terms of what was going to happen from an economic standpoint going forward. You saw the EV incentives come off and then come back on. You had a ICE situation where there was incentive to buy an internal combustion engine vehicle because of regulations that were going to change July 1st. That had an impact. And then the supply chain is much more complicated in China. There are a lot more players, and there's a lot more willingness to buy low quality product and use it in batteries because they do have a very low end market, whether it be in EVs. Some people making ESS will literally buy any kind of lithium chemical that wouldn't be considered usable in a Korea or a Japan. So China's much more complicated, many more players. And the other thing is, in an industry like this that is immature, you're now seeing inventory across the supply chain. So you can have lithium inventory in the terms of battery cells. You can have lithium inventory in cathode, and that's got to be factored in. So some years when they say, well, there was, X hours, gigawatt hours of demand, it might have been excess production that's going to have to be worked off, and that will pop up almost immediately in the spot price because the spot price is very sensitive. But if we look at the narrative, that the numbers you gave, that really is, with all due respect, a false narrative about lithium price, because the spot price isn't the price, it's a price. If you do a scatter diagram of import prices in the countries like Korea and Japan, it's all over the place. You can find any price you want, and right now you can justify just about any narrative you want to. Give you an example. People will say, oh, the price is back down in the 20s. Well, if you look at data coming from Korea or Japan, and people assume there's a 3-month lag on a lot of these contracts, why June year to date is the average price for lithium carbonate still close to $65 a kilo? If you look at the prices for June, and that's the latest data I have, I probably am able to get July now, I just haven't done it. But you had the price from China was 45, the price from Chile was 73 in June. It's all over the place. So I like to caution people that when you're looking at these metrics, look at all the data and then do some analysis. SQM's Q2 average yield on LCE was $34. It was down from the mid 40s. So yeah, prices are trending down, but this whole sky is falling narrative is wrong, because there was a price that was 80,000, but there wasn't a lot of volume that moved at that price.
Joe, you bring up a very good point. Mainstream media always discusses the movements in the spot market, but the real market is the long-term contracting market, which takes place between the producers and the OEMs. What's happening in the contracting market in terms of pricing?
Well, I think if you look at data that a benchmark, they have a contract price number. You will see it trend down if spot is trending down, but it doesn't mirror spot because the contracts aren't all the same. They don't all use the same metrics. And let's be realistic. I will still say that I believe that overall, by the end of the year, the price in 2023 will be higher, not lower than 2022. And the first half data supports my assertion pretty well. but we have to see what happens in the second half. I could wind up being wrong, but look at what the spot price is now. It's still significant. If you go back to 2020, there were spot sales below 4,000 a ton in China, or a Cobre sold below 4,000 in 2020, which is now all chem. And now it's a sky is falling narrative when, if you look at benchmark data, I think the low ebb is just in the low 20s, and then it went back up to the 40s. Now it's back just below 30. Those are great prices. Those would have been considered miraculous a decade ago, that nobody could have foreseen $30, let alone $80 spot pricing. So I think the thing people really need to look at if you're looking at investing is what's the cost curve look like now? What type of pricing is the cost curve going to underpin? And is my investment, or my target investment, on the right side of the cost curve? 20 to 30 or 30 to $40 range for pricing going forward is not just possible, it's likely, because of all the lepidolite being produced. The low quality lepidolite puts the cost curve up at 30s. But as long as spodumene from Australia is selling above $3,000, lepidolite's not the high point of the cost curve. The high point of the cost curve is an independent converter in China buying spodumene and converting it from there.
So as you mentioned, the price has been very volatile this year. It peaked out at $80,000 a ton in late 2022. I think it got as low as $30,000 a ton in 2023. And I just want to clarify, where do you see the price going by year end?
I don't know whether China has the discipline to keep the price in the range that CATL and BYD and the analysts that are compliant with their wishes are talking about. I think it could run again, go up through the 40s into the 50s by the end of the year. I'm not predicting that, because I really don't care. The companies I'm invested in do fine if the price is 20. They do fine if the price is 30. But what you're seeing, the chaos in China because of all the African ore they're bringing over, and what we saw was a lot of lepidolite that was being mined illegally. It got shut down, and then some of the lepidolite producers that were small had to go out when the price went below the equivalent of 40,000 a ton. So lepidolite is great if you're a brine producer, if you're on the low end of the hard rock cost curve. You love lepidolite because it basically guarantees you that no matter what Morgan Stanley may say, that price is going to go below the marginal cost, it will go below the marginal cost in China. It always has for short periods of time. That is not a sustainable long-term trend. So I agree with Morgan Stanley that it can, has, and may happen again, but that's not something that you do long-term economics on.
And when it comes to investing, I don't expect you to name any names, but do you see this pullback that we have seen in 2023 as a buying opportunity for lithium equities?
Oh, 100%. If you look at a company, take Lithium Americas, and look at the high, now they're in production. They're about to split into two pieces. Lithium Argentina, which will still be a multi-asset play, and LAC, Lithium Americas, which will be the North American assets, Thacker Pass, and I think they'll go beyond Thacker Pass at some point. But if you look at what the high price was in 2022 and what the price is today, it's mispriced. And that's just one example, and it's timely to me. I just did a podcast with Lithium Americas from Argentina about 10 days ago. And so I'm thinking in those terms, but I could name other names that I think are, even Albemarle is a really good value right now. And I always used to say I would never buy Albemarle stock, and I've done really well getting in and out of Albemarle since COVID began. And I think again, I think right now Albemarle's mispriced as well.
Joe, strategic investments by both OEMs and producers have been an ongoing theme in 2023. General Motors has invested over $650 million in Lithium Americas. Albemarle invested $110 million in Patriot Metals, and Stellantis recently invested $100 million in Controlled Thermal Resources. Do you think this theme of securing the value chain will continue into 2024?
I do. I think it's a long-term theme now, and you didn't mention Albemarle's attempt to take over Liontown, but that was a very large number, and Liontown's still independent. I do think, and I think you've heard, whether it's Rio Tinto, they say they're going to be cautious, but they're interested. It's obvious that you've had the CEOs of both Exxon and Chevron in the last 2 months talk about lithium. They've never spoken about lithium before. You have the ongoing discussions about DLE and when DLE meets its promise. So I think as we go forward, you'll see a combination of big battery and big auto continue to try to secure their supply going into the next decade.
And you've said in the past that you also expect energy companies to get involved. You've mentioned that Exxon and Chevron have mentioned lithium in previous conference calls.
Yeah, they have, and I'm actually advising a large energy company right now, and I have in the past. And this time, I think the difference between the past and I'm not naming those names, but when I was in Argentina a couple of weeks ago, I talked to 5 oil companies down there, and they're all interested. And you have seen oil down there, the South American oil, buy and sell resources. Now I think they're more of a mindset to buy and develop.
Joe, in April of this year, Chile's President Gabriel Boric put forth a national lithium strategy proposing that the state take over control of its lithium resources. Current contracts would stand as is, but future contracts would be based on a public-private partnership with state control. What are your thoughts on this, and how do you think this policy or program will impact not only supply, but the price of lithium going forward?
Well, I actually made the cover of the online version of La Segunda, the paper in Chile, criticizing the Boric move, saying I believed it would effectively slow down development outside the Atacama. I will walk back one thing he said. He did say that the 2 contracts in the Atacama could go as is, but he also stated that he wanted to see both parties negotiate, and SQM really doesn't have a choice. They have to negotiate with Codelco, they're the appointed nominee, because their concession runs out in 2030. And even though it's 2023, that may seem like a long time, but if you're deploying capital, large amounts of capital, that's a pretty near-term thing if you're not going to have those assets after 2030. So I think you will see a deal between SQM and the government that gives the government what they want, but also gives SQM long-term secure resource. Albemarle's in a much better position from the perspective of their deal goes to 2043, and they can wait a couple of years and see if Boric is out and this all changes, but we'll have to see how both parties play it. On the other resources, there is a resource out there that is not part of the new deal because it's under an old concession that can go forward, but all the other undeveloped salars out there, if the government wants a 51% carried interest, they haven't been clear about whether they intend to put up the capital for their 51%, but if they're not going to, that basically puts the country, in my opinion, in Chinese hands. The Chinese will make those kind of investments. Western companies will not.
Joe, you are constantly on the road presenting at conferences and speaking to investors, and earlier this year, you were in Argentina for the Lithium South America conference. And I'm just curious, what are you hearing from investors and also other companies at that conference?
Well, I think there's now a gold rush mentality. And I saw it both at the Fast Markets event in Las Vegas in June and what I saw in Salta, Argentina. It's a combination of FOMO and then some realism that there may have been missed opportunities early in the decade when the movement of the energy transition wasn't so obvious. I mean, that's been one of the big problems with investing in lithium, because a lithium boom was always predicated on EVs taking off. And we had a lot of false starts, going back to Carlos Ghosn saying he was going to have 1.5 million of the Leaf on the road in the middle of the last decade, and Barack Obama saying in his 2011 State of the Union address he was going to have over 1 million plug-in vehicles on the road by 2015 or 16. Those things just didn't happen, which made the lithium industry very cynical about investing. Now everybody believes it. It's before us. You have all the auto companies making declarations about when they're going to stop making ICEs. Now that it's real, you've got the time lag. It takes a long time to bring a lithium project on. So playing catch up is going to be interesting, and there'll be a lot of money, there'll be a lot of value destroyed as people get the gold rush mentality.
And in terms of the attendees or the number of attendees, are you seeing more people attend these conferences than you have in the past?
Yeah, I think I'll use the Salta example. The first time I spoke in Salta at Lithium South America, and it alternates each year between the provinces, but the first time I spoke was 2018 in Salta, and they got 600 people, and they were just overjoyed because they'd never had anywhere near that number. And that number stayed relatively flat, I think, the last few years, and then this year they got 1,700, which was and they had a waiting list. They didn't have room to do more than 1,700. If they had been able to let everybody in, it would probably been closer to 2,000.
So in spite of this pullback that we've seen in 2023, there's still a great deal of interest in the sector.
Oh, I think we're just at the beginning of the interest. You have to go back and look at 2020 and towards the end of the year when the price just started to go back up. EV penetration globally was less than 3% at the time price started to go. So once you go 3 to 5, you had this big tipping point. The supply chain wasn't able to handle it. Price went crazy. And now you're looking at a world that's not going to be totally dominated by China in the future. So once you bring the EU and North America into the battery and EV game, it puts real pressure on China, because China used to get virtually everything that was produced in Western Australia would go to China. That's no longer the case. The Aussies are trying to convert their spodumene into chemicals themselves, plus there'll be ready buyers in North America and Europe as conversion capacity gets developed in those jurisdictions. So even though China's plans are to grow rapidly and to maintain its dominance, they are freaking out and going everywhere trying to secure resources.
So in your opinion, in spite of this pullback that we've seen in the sector, it's a massive buying opportunity.
Yeah, I think you have to be selective and do your analysis. But yeah, this lithium thing is going to run, and that's what, if you look at, I've got a chart in my presentation that shows some of the biggest banks. I think I put 5 of them on there, plus, or 4 plus my forecasts. All of the investment banks but one that I put on that chart predict a shortage throughout the rest of the decade, but they all have price going down below 20. And that literally makes no sense. Especially some of those same companies, when they predict the spodumene price, they predict the spodumene price dropping, but staying at a level where the converters, the cost curve would be higher than the price. So I think it's just people still aren't comfortable with lithium as a business. They're still not they want to put it in the lens of uranium or the lens of iron ore or the lens of something else and say it's just like this, because they don't understand it. If you look at the industry, it's still controlled by a very small number of players. You may have 500 companies out there with lithium in their names, but you don't have a dozen that make a difference.
Joe, you run a very successful podcast focused on lithium. Can you just tell us the name of the podcast and where can we go find more information on it?
The Global Lithium Podcast is on all the major platforms, whether you listen on Apple or Spotify, or even now Amazon's got it. And honestly, between Apple and Spotify, 75% of my listeners use those too, but there's a smattering of, whether it's Google or whomever.
Joe, before we wrap up, I'm going to put you on the spot now. The Buffalo Bills had such an amazing season this past year, but they lost to the Bengals in the divisional round. Is this going to be the year for the Buffalo Bills?
Barring injuries to about five different players, and people can probably figure out who those are. One would be Josh Allen. They stay healthy all year. I like the Bills' chances to get to the last game. But I'll be in Western New York at the time, and we will suffer with the faithful if the Bills don't do it all this year.
Well, Joe, that was a very insightful conversation on lithium and also the Bills, and I want to thank you for making time today.
Always a pleasure, Jimmy.
Go Bills.
Go Bills.